Ripple XRP holders, HBAR holders, Algorand holders. Blackrock is about to make everyone very, very rich over the next few years. And is it possible to turn $1,000 into over $10 million in crypto? I know that seems ludicrous. I know that seems crazy, but by the end of this video, I'm going to be talking about the best way to be able to scale your income over time and then eventually get to the point where you can become the first millionaire in your family tree. So we got some big news to talk about in this video with what's happening over in Hong Kong for Bitcoin and Ethereum ETFs, what's going on in the entire altcoin market, and how soon we will see parabolic rallies to the upside. Also some updates on HBAR, getting into the price chart for what just took place over the past 24 hours, some FUD that's being spread out there about Blackrock signing off on this press release, and also a massive partnership with Algorand that virtually nobody knows about, and how this is going to affect the price chart for Algorand over the next few years. We're going to get into some technical analysis for what we see happening on the charts, and also how this relates to XRP. Because virtually everyone in the crypto space is calling XRP a scam coin, but is that actually true? Because when we connect the dots in this video, you're going to discover some things that's going to absolutely blow your mind. And then also we have an update from Jeremy Hogan over at Crypto Law on the Ripple versus SEC lawsuit and when that will be most likely coming to a close. So we got a jam-packed video for you guys that I know you're going to love. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. If you're going to become the first millionaire in your family tree, confirm it by tapping that subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So as we dive into the markets and what's happened over the past week with the rebound for Bitcoin and the altcoin market, we see projects like Bonk, Pepe, Whiff, Floki up, and then we see HBAR up 60%, Algorand up alongside with it, and other projects like Near, Fetch AI, a lot of AI projects, a lot of gaming projects, and specifically meme coins. So to kick this video off, our friends at Hat & Souvenirs wanted to do a limited edition sale for you guys for gold and silver collector's editions, XRP and Bitcoin gold and silver coins. And I think this is really, really awesome. So I'm going to leave a link in the description below for you guys to check these out so you can scoop them up, because they only have 1,000 of the gold and 2,000 of the silver, and these are going to sell out really, really quick. So I went ahead and got a bunch of these before they sell out, and I actually talked with the owner of the company, and they're going to give you guys 10% off when you use the code BULLRUNNERS on your checkout. All you need to do is go through the link in the description below. It'll take you to a page that looks like this, and you can either select gold or silver, XRP or Bitcoin coins. They even have XRP baseball caps as well too. You just add as many to the cart as you want. And then right here where it says coupon code, you just enter in BULLRUNNERS and click apply, and it'll knock 10% off your order. So I think this is really, really cool if you guys hold XRP, you believe in XRP, because what we're going to talk about in this video is going to give you a long-term perspective as well as a short-term perspective for what's happening with XRP, what's happening with Bitcoin, HBAR, Algorand, and the rest of the altcoin market, because a lot of people think that the top is in for the markets. And if we were to pull up the crypto total market cap, total 2, excluding Bitcoin, we can see that it took about 1,085 days until the altcoin market really started breaking out from $175 billion. And at the chart at the bottom of the screen, you could see we're at about 1,064 days where this corrective period is in. And within the next week, it's going to be 1,085 days. So if we see the altcoin market start to break out, this could be the last chance to be able to accumulate some of your favorite projects, because the chart is looking very, very similar to the last few bull runs. And with the ETFs being approved in the United States, a lot of people are ignoring the fact that Hong Kong's first batch of spot Bitcoin and Ethereum ETFs are officially approved and to start trading on April 30th. So in less than a week from now, unlike the cash created model of the United States spot Bitcoin ETFs, Hong Kong aims to offer in-kind creation models for ETF. So that enables the creation of new ETF shares by using Bitcoin and Ethereum, which is going to drive even more demand into the markets. And as you guys know, about 3 months to 12 months after Bitcoin's halving, historically, every single time, it's led into a massive parabolic bull run. So altcoins will follow. Now, what altcoins will follow that? Well, in order to understand which ones will follow, you need to understand what is ISO 222. It's an international standard for financial messaging that provides a common language and structure for the exchange of electronic data between financial institutions and the international payment system like SWIFT. And so I've covered this in previous videos, but this is super, super important to understand for what's happening with HBAR, Algorand, and XRP in this video, because I talked about this a long time ago, and I'm going to bring up that video for you guys, because the goal of ISO 222 is to replace the multitude of different messaging formats and protocols used by various financial systems with a unified and standardized approach. And so you're very, very early right now. And if you're wondering, like, why is nothing happening, on the price chart for XRP, I'm going to explain that. And I'm also going to be sharing with you guys a way that we leverage to be able to scale our income fast in the crypto space, so you don't have to sit around and just wait for one project to take off. So there was a list that came out showing the ISO compliant cryptocurrencies in 2024, and that's XRP, Cardano, QNT Quant, Algorand, Stellar's XLM, HBAR, IOTA, and XDC. Now, I made a video about 5 months ago, back in November 2023, talking about the top 10 cryptocurrencies underneath $1 that large investors were buying, and that was right when HBAR was at about 5 cents. Right around here, it currently rallied upwards of 18 cents, between 200 and 300% with the recent news that's taking place right now. So this video came out after HBAR bottomed out in the bear market and was starting a reversal. And right after that, it flipped the 50 SMA and it's held it as support. And so we can see this bullish channel for HBAR building momentum. We can also see the RSI in a bullish channel as well too. And so the key resistance to watch for is where it just wicked off of at about 18 cents right here. Now this acted as support all the way back here in February of 2022. And also there's a massive support right here in July of 2021 at roughly 15 cents. So if HBAR, and in my opinion, it's not matter of if, it's just a matter of when, because all of the signs are lining up for just a massive bull run for this project right here. When HBAR flips this zone right here of resistance at roughly, 18 to 19 cents and holds it as support, the next stop is all the way up here at like 35 cents. And then beyond that is really the all-time high, all the way up here at 57 cents. So what I would expect to happen for the next few months is if Bitcoin starts to break out and goes past the all-time high, when that happens, nobody knows exactly when. I mean, it might happen May, it might happen June, July, August, September, maybe even all the way to Q4 of 2024. When Bitcoin starts breaking its all-time high and going upwards of 80, 90, 100, $120,000, if that were to happen for Bitcoin, then I would expect HBAR to see another major breakout to flip this zone and hold it as support, and then to retest the complacency stage here at about 35 cents, because HBAR has been lagging behind the rest of the market when we've seen projects like Solana rallying first this bull run all the way upwards of $209, almost to the all-time high, consolidating right now. So looking at HBAR is behind right now, and it has some catch up to do on the next major leg up for Bitcoin. Now, what's going to cause this catalyst is tokenization of real world assets, because Hedera just brought the world's largest asset manager, Blackrock, on chain, as Blackrock's ICS, a US Treasury money market fund, is tokenized on Hedera with ARCX and Onera. And this has erupted all over Twitter with people asking stuff like, but is BlackRock actually involved? Did they know about Hedera? Because there was some controversy around Cointelegraph manipulating the market, posting that news out, then saying it's fake. Well, BlackRock owns the fund, so yes, they're involved and they know about Hedera. And then Chris Hasker posted saying, we had to wait for BlackRock to sign off to include them in the press release. So yes, they know. And then Dustin posted this saying, plus, that's just one fund. Wait until they tokenize the rest. BlackRock's active equity platform includes 40 funds. BlackRock runs more than 120 mutual funds, and they operated a total of 517 equity funds. So this is what caused the price to pump over the past 24 hours from 8 cents all the way upwards of 18 cents. And of course, people that have been holding, for the past year, while HBAR hasn't really done too much, sure, it's done pretty well. I mean, it's gone from 4 cents upwards of 13 cents, saw a sell off to 7 cents. So with this recent pump up, people are taking some profits here, but when in doubt, zoom out. Look at the last bull run for what happened to HBAR. So when this project rallies, it rallies fast. From January 1st of 2021, it went from 3 cents all the way upwards of 40 cents by March. So in literally less than 3 months, and then saw a final blow off top of 47 cents. So its market cap is only $4.5 billion. And the real world asset space is projected to be about like $13 trillion over the next, 6 years. And so by 2030, so on their website, Hedera.com, real world asset tokenization for cross-border, remittance, financial assets, digital assets, real estate, stablecoins. They pretty much have the largest, most credible governing council in the space with Chainlink Labs, Boeing, Dell Technologies, Google, LG, IBM, Ubisoft, the list goes on and on. So this is one of the most legitimate projects in the space, guys. So if we see another pullback for HBAR to 10 cents, not financial advice, I'm not a financial advisor, right? Go consult your financial advisor. These videos are purely for education, informational purposes only, but that could be the last stop before the next major leg up. And also, you guys want to be forward thinking here, understanding what's going to happen, not in the next week or month, but what's going to happen in the next 1 year, 2 years, 3, 4, 5 years, so you can be ahead of the curve here. And so the key to making millions in the crypto market is seeing what's going to happen years in the future before it ever even happens, and then just stacking your bags in the high conviction plays that aren't going to go away over the next few decades. And then sure, you could trade some projects that are going to do like 5, 10, 15, 20x a lot faster in the meme coin space. That's why we make a lot of videos on this channel talking about different cryptocurrencies, different narratives, different sectors for you guys to be able to make money. And you can check those out on bullrunners.com to stay up to date when we release a video before the YouTube algorithm can push it to you. So you can be notified first. But this right here shows Hedera and Algorand ecosystem forming an alliance to bring together the entire Web3 ecosystem as we go into the new digital financial world.
So I'm Lehman. I created Hashgraph and started Hedera, and I'm just really excited to be here with you and with you.
Absolutely.
Tough one to follow that. I'm John. I'm the CTO at the Algorand Foundation.
It is so great that we have this partnership, and we're bringing in others also, other blockchains, banks and credit unions and other people. It's just so important to do that.
Well, I'm really glad you guys are working on this. I mean, I've often said if we're going to get to 1 billion users in crypto in the next year or two, user interface is the key.
One of the reasons the Algorand Foundation and the Algorand ecosystem at large are so excited to be a founding member of this alliance is because the way the team under Lehman's leadership have built this thing, the fact that this thing is not, Hedera specific, Algorand specific, or any other chain, it's nonpartisan. And by that, we're hoping for the first time that we'll see broad uptake across the industry. Previous attempts at this have been okay, but the one thing that they failed at is that they always leveraged something that was brand specific.
Interesting. And it sounds like you're really positioning and building this alliance to be neutral, to be open, to be decentralized. I really love that you're keeping to that sort of key ethos. I know that so many people, that's critically important to them. What are you calling the alliance?
It is the DREC Alliance, Decentralized Recovery. So DeFi is decentralized finance, DREC is decentralized recovery. So it's the DREC Alliance, and Algorand and Hedera are involved right now, but other blockchains will also be involved, and we are recruiting others, and then we have lots of other people involved. We have wallets involved, we have people building apps for banks, people building apps for credit unions. Sure. So the building blocks and Bank Social are two that are building for them. We have wallets involved, and we want to get even broader people like password managers involved.
That's why Algorand was also another altcoin that I mentioned in the video that I made about 5 months ago at about 11 cents. And currently Algorand is at about 21 cents. So as you guys can see, smart investors are loading up on Algorand. And with the news that took place, I mean, the price pumped upwards of 25 cents. The people that have been holding over the past month or even the past year that are just frustrated with these ISO 222 projects that aren't performing as well as the meme coin space, well, they're taking some profits right now. But when we look at the chart for Algorand, this gets me excited because the last bull run, Algorand peaked all the way upwards of $3. And currently it's at 21 cents right now. It flipped the 50 moving average. And right here, you guys can see this is when the video came out in about 10, 11 cents right here. Once we flip the 50 SMA and we're holding it as support, the next support that we're looking at is roughly 45 cents. And so usually what we see on the charts for projects like this that have seen a trend reversal, they've bottomed out, they're not going anywhere, they're making massive partnerships, is once liquidity flows into them, it flows in fast and you see these massive green candles happen over the course of like a week or two, less than a month usually, and price surges up, 100%, 200, sometimes 300%. So what I would expect to happen next is for the next major move for Algorand to be rapid, to be violent, and to catch people off guard, and just to happen overnight, and everyone to wonder what's happening. And then they FOMO in on this rally up, and then the next resistance that it rallies to could be like 90 cents, and then we see a consolidation period and people take profits, and for it to cool off for a little bit before it makes the next major leg up to take out other ranges. And so we see it break a range and then back test a previous range. So I would expect it to break through 45 cents and then just back test it as support. And so there's a few accumulation periods in the markets that smart investors like to back up the truck for. So the first period, of accumulation, this is where the smart money accumulates, and that's at the bottom. When I put out videos like this months ago, you can't get a better entry point than that. That's when I was accumulating Algorand. That doesn't mean that you should. You should go talk to your financial advisor and see what they have to say. The next best period is before the masses catch on to these partnerships. So that's roughly right around now, or if we bleed out a little bit lower and we come back down to 10 cents, or we double tap the bottom in a black swan event, maybe there's some more war news. I don't know. I can't predict that. But if there's another shakeout event, that's the next best period, because once the market breaks out and we see like 100, 200, 300% rally, the period after is to try and scoop it up on pullbacks when we backtest previous ranges as support that once were resistance. And so 45 cents is going to be this area that I would expect Algorand to either come up to and get rejected for, or just to blast right through it and go all the way upwards of like 70, 80, 90 cents and then cool off within this zone right here before making the next major leg up to test $1.80, which is the resistance all the way up here. It also was resistance back here, and it was kind of some support right here. So this would be the next major stop for Algorand at $1.80, sometime maybe in Q4 of 2024 or 2025. So if we were to measure from where we are right now at roughly 20 cents to the high, that's a 1,300% or a 13x from here. So with Algorand's market cap sitting at only $1.7 billion, I don't see why this project couldn't 10 to 20x this bull run. Because we now know that HBAR and Algorand are forming a strategic alliance. And look right here in this video that happened a while back with Ripple CEO Brad Garlinghouse.
This is another place where tribalism is not helpful to us. Right. And so if we can work together, Algorand just mentioned that they're going to work on this, we're going to work on this, and
we're going to make sure we start to talk about whether we can collaborate as well, so it's good.
Oh wow,
yeah,
fantastic.
possibly.
That's
and we're going to talk about how we can collaborate with the things you were talking about for scam identification and dealing with it. I think that we can work together in a lot of ways as an industry.
So it's very interesting how people are calling XRP the biggest scam coin in crypto, but yet they go and they buy a project that has like no utility that surges 400%, and they say that that's legit because dumb money, dumb retail idiots only pay attention to price action on the chart. And if the price is doing well, they think that that makes cryptocurrency legit, when in reality, any single scam project can pump 200, 300, 400, 500% with no real utility, but it's going to get absolutely obliterated during a bear market, and it's not going to be around for multiple bull runs. So XRP has already proven its grit. It's already proven it. It just needs to prove it on the price chart now. Sure, you can make money with other projects that are going to be here today, gone tomorrow. Yeah, you can catch like 5, 10, 15, 20Xs on those. We've caught tons of those projects. But what we look for is what's going to be here for decades to come to create generational wealth. See, it's just greedy for you to make money right now just for yourself. But if you want to create generational wealth, I want you to think 10, 20, 30, 40, 50 years in the future. Because BlackRock, why do they choose HBAR? You know, it's all through ARCX that is connected to, and I think I pronounced that correctly. You don't have to know how to read well to make money. You know, I was a slow reader in school. You just have to know where the money's moving. But they're connected with Medico that was acquired by Ripple. Ripple owns Medico, who uses XRP and XRP Ledger for tokenization initiatives. So this guy right here is saying, bro, it's hard to believe anything you say when you pump XRP, the biggest scam coin in crypto. BlackRock chooses HBAR. You lose. So you got to think outside of whatever box you're in to actually understand what's happening behind the scenes. And even if you don't understand all of it, that's fine, because I know it can be very, very complicated with blockchain technology talk. But to start off, let's dissect R3, which is an enterprise blockchain company that was founded all the way back in 2014. Through their inception, it's not necessarily what you call traditional, because they started off as a bankers consortium between 9 banks. That was BBVA, Credit Suisse, JP Morgan, UBS, Goldman Sachs, State Street, Barclays, Commonwealth of Australia, and the Royal Bank of Scotland. Now, as you can see here with R3 Corda's permissioned distributed ledger technology network built for the banking sector by the banking sector, you can see distributed ledger technology connections to Corda. Well, look at these logos right here. What do you guys see? Do you guys see HBAR, consensus service to Corda? Do you guys see XDC, hybrid network through DASL bridge? Do you guys see XRP's integration to Corda apps? Do you guys also see Algorand right here? Now, what's interesting is the R3 founding members, JP Morgan, State Street, UBS, Credit Suisse, BBVA, and who uses Corda? Fidelity, HSBC, NASDAQ, Wells Fargo, Bank of Canada, ABI. So governments, central banks, and institutions have already picked the cryptos that they'll use and invest in the new digital economy. So the list is not exhaustive, but it's starting to take shape. And right here, you can see that this was posted on Twitter by Kyle McLean, and it's the Corda's official document. But look at this on the public blockchains: Ripple's XRP, Algorand, Solana, Polkadot, ICP, Ethereum. So I don't think they'd be listing these projects on their documents if they didn't have some plan to integrate with them now or in the near future. And also Ripple acquiring Medico to target several $1 trillion in different markets and different verticals. Well, number 1, tokenization. Number 2, integration with payments and liquidity. Number 3, digital custody for assets like gold. Number 4, digital asset insurance. Number 5 would be tokenized securities. So according to Colin Brown's post right here, HSBC will manage the KYC.
Ripple trying to be like a sort of one-stop shop for institutional adoption of crypto, and institutions are going to be the main drivers. So you need some place to store it. If there's CBDCs, if there's stable coins. People are going to need places to store them. They're going to need connections to on-ramps and off-ramps, payments, liquidity services. We looked at many different companies. And then in May, we acquired Medico. But Medico has so much more than they have those things of layered services with compliance. They have this possibility for a tokenization platform and this integrating it with payments and liquidity. HSBC, they plan to offer a custody service for digital assets to their clients. It's kind of like a layering service. What's great about that is HSBC can do the sort of compliance part for them. And they're looking at things like digital asset insurance, tokenized commodities like gold, tokenized securities. HSBC is extremely interested in those types of projects. Their Orion project, which was a tokenized gold.
Now, another point that's interesting is Ripple posted this a while back. I covered this in a previous video, but the stablecoin market is booming at around $150 billion today and projected to soar past $2.8 trillion by 2028, potentially even sooner, because if the market tops out at the tail end of 2025, we don't know how much money is going to come into this industry, guys. We could see multiple trillions. So Brad Garlinghouse is saying this market is going to grow to over $5 trillion and double before the end of 2024. What's it going to do in 2025 based on Bitcoin's 4-year market cycle theory? Well, the tail end of this bull run is roughly Q4 of 2025. So that's why later this year, Ripple is going to be launching a stablecoin pegged 1-to-1 to the US dollar on the XRP ledger and Ethereum. So what do you think that's going to do for liquidity to extend Ripple's reach into both institutional and DeFi realms, diversifying use case and enhancing their payment infrastructure to bring the world of traditional and decentralized finance closer together? So what we need to understand here is people's comments on social media like Twitter, YouTube, for how they're really feeling is not an accurate indicator of what's actually happening, because when the markets are at an all-time high during the last bull run and Bitcoin was upwards of 60K, virtually everyone was saying, we're going higher, you got to get in, grandma was getting in, grandpa was getting in, your cousins were asking you about it, your taxi driver was asking you about crypto, you go to the hair salon to get a haircut, was that they were asking you about crypto and you were telling everybody about it, right? Or they were telling you about it. And so everyone was so excited that they got drunk off of the euphoria. But when the fear was at an all-time high and people were out of the markets, why was it any different? Well, it's because retail was looking at their portfolios only rather than looking at the partnerships and what was taking place from a utility standpoint. So back here in July of 2014, when XRP, the Bitcoin price chart, was all the way down here, virtually everyone was saying XRP is a scam, get out of XRP, XRP is doing nothing. And right after that, several months later, XRP drastically outperformed Bitcoin. And then everyone was like, XRP's gold, XRP's amazing. Everyone was saying XRP is the best asset in the crypto space. Then XRP started to underperform all the way down here to March of 2017. Before that rally, XRP was at 0.003. XRP was saying, XRP's crap, XRP's trash. Bitcoin's performed over 500%, whereas XRP's lost over 95% of its value. XRP's a scam. So when I look at comments like that on social media, do the opposite, guys. You just do the opposite. The reason why is because 99% of the world, they're just dumb. They operate off emotions. And it doesn't mean that they're dumb in terms of like being a plumber or a dentist or stuff like that. They're just uneducated about emotional market sentiment on what happens around these stages. So right here, when XRP is underperforming compared to Bitcoin, everyone's fearful. Everyone's out of XRP and in Bitcoin. Rightfully so, because you make money this way. You know how to pivot, right? So how do you make money in crypto? You pivot from underperforming assets to assets that are performing well. And then once those assets that are performing well and they perform the best that they could, you pivot out of those into ones that are going to outperform those. And so when XRP outperformed Bitcoin, then it came back down again. By December of 2020, XRP had bottomed out to Bitcoin. Then it rallied up and it performed to 10x. So you want to be rotating from Bitcoin to XRP when this chart bottoms out. So where are we right now? We've either bottomed out or we're close to it. Sure, we could come down further. Bitcoin, I think we might actually come down a little bit further. Maybe we come all the way down to this support right here. So I don't know exactly. For me to try and be a Nostradamus here for you guys and say that, yes, we've bottomed out. It probably hasn't yet. Maybe it'll come down a little bit lower. And I would expect Bitcoin to pass the all-time high, for Bitcoin to surge, Bitcoin's dominance to top out. Then once Bitcoin's dominance starts to roll around, that's when I would expect XRP to Bitcoin to bottomed out and for XRP to rebound and start melting faces. When we start to see news headlines break for Swift, ISO 222, this whole entire standard take place, then this narrative will start to surge. And we'll see projects like XRP, Quant, Algorand, XLM, HBAR, XDC start to go absolutely parabolic. But that won't happen, in my opinion, until after this lawsuit is completely over. So let's see what Jeremy Hogan has to say about the Ripple versus SEC lawsuit and what's going on.
But the point is is that the Goville case causes a big problem for the SEC, and it came out right at the perfect time. Amazing timing. So let's get into that and talk about the Goville case, the injunctions, the remedies, and what's going on in the Ripple case. And then at the end, we're going to talk about what I think is going to happen. Now, to rehash where the case is at, Judge Torres said that only Ripple's past sales to institutional buyers were sales of security. That's all. Now we are at the place where the judge will have to say what happens to Ripple for violating the law on those sales. And there are three things that the SEC wants. It wants an injunction against any further violations. It wants money, which is called disgorgement. And three, it wants money in the form of a penalty. Now we know exactly what the SEC wants and how much because it actually submitted a proposed order to the judge telling us exactly what it wants. And so let's take a quick look at the SEC's proposed judgment. And this is a proposed judgment. The judge isn't signing off on it. This is just the SEC saying what it wants. It says that it wants, pursuant to Section 21, defendant to be permanently restrained and enjoined from directly or indirectly conducting an unregistered offering of institutional sales. It wants it to be ordered that defendant is liable for disgorgement of $876 million and change, representing net profits gained as a result of its violations of Section 5 of the Securities Act as found in the court's summary judgment order, together with prejudgment interest thereon in the amount of $198 million and change, and a civil penalty in the amount of $876 million pursuant to Section 20D, blah, blah, blah. Defendant shall satisfy this obligation by paying $1,950 million to the SEC within 30 days after entry of this final judgment. Wow, that's it. That's everything that the SEC wants. It wants an order from the court that Ripple can't break the law by selling to institutions, and it wants money. It wants a lot of money, about $1.95 billion with a B. Now, as far as the injunction, to me, it's kind of meaningless to get an order from a court saying you can't break the law again. It's kind of redundant and pointless. But for Ripple, this is actually a big problem. And so when you look at its brief, it takes a lot of time to address this. And that problem has to do with ODL sales of XRP. Now, the legal issue being addressed is whether Ripple is likely to continue violating the law if there's no injunction issue. That's why the SEC, in its initial brief, spent so much time talking about how Ripple celebrated the win and acted as though it was going to act in disregard of the law. I think the SEC attached something like 30 pages of Twitter posts talking about the ruling, and it included that as evidence to the court. There was one picture in there, though, that they forgot to put in, and that was Brad Garlinghouse's picture with the two biggest, wild, crazy party animals ever. And here is that picture, which they forgot to put in. That was at the Ripple proper party, and we had just done like 10 lines of coke and talked about how Ripple was going to continue violating securities laws. Just kidding about the violations of law. In any case, from a legal standpoint, there's not much to discuss about the injunction, and that's because a lot of the injunction stuff is left up to the discretion of the judge. But it's very important for Ripple because it doesn't want its sales of XRP for its on-demand liquidity product to kind of be lumped into the injunction. That would be a big problem for it. So Ripple focuses on trying to get the judge to kind of carve out those sales from any potential injunction by arguing that those sales cannot be sales of securities and shouldn't have been included in the institutional sales from the beginning. Let's take a look at that on page 7 of its brief. Quote, ODL buyers hold purchased XRP for mere seconds. Ripple's ODL contracts protect buyers from losses and prevent them from earning profits due to even momentary volatility in the price of XRP. They buy XRP solely to use for ODL transactions. ODL contracts do not contain provisions that this court has found to show an intent to invest, such as lockup periods, resale restrictions, and discounts. Now, reading that, I think Ripple has a very strong argument here, but the problem is that the judge apparently lumped ODL sales in with the institutional sales in her summary judgment order, and sometimes it's hard at the remedy stage to kind of get it unlumped. So the SEC will be filing one more brief in a couple of weeks, and I think that would be the issue to watch out for. How strongly does the SEC fight to keep ODL sales in the injunction? An injunction against using XRP as a bridge currency obviously affects Ripple's business, and would be bad in business terms. But enough of that. Let's talk about, I think, where the heart of this issue is, and that's about money. Okay, and in that case, it's called disgorgement. And I think the SEC's main ask here is for over $1 billion of disgorgement, meaning it wants Ripple to pay back all the money it made from its institutional sales of XRP plus interest. That's over $1 billion. And that ask would have been an easy reach up until October of last year and the birth of the Govel case, or Govel case, I don't know how you say it. And here's what the Govel case says per Ripple. Let's look at its brief on page 18, I believe. There it is. Quote, the SEC has failed to show that it should obtain the equitable monetary remedy of disgorgement under Liu v. SEC and SEC v. Govel. Liu held that SEC's disgorgement remedy is subject to the restrictions of equity jurisprudence. Among other restrictions, disgorgement must be awarded for victims, and the SEC can obtain disgorgement only of a defendant's net profits after deducting legitimate expenses. Govel further held that an investor is not a victim for equitable purposes if he suffered no pecuniary harm. Accordingly, the SEC must show that investors suffered pecuniary harm as a predicate for a disgorgement remedy. Now let's think about that again. Now, under Govel, which is binding second DCA case authority, the New York court is under the second DCA, so whatever it says, they have to follow. The SEC must show that institutional XRP purchasers lost money on their purchases of XRP in order for Ripple to even have to pay 1 penny back. And that's a case that came out last year in October, and that's a humongous problem for the SEC because, in general, the price of XRP has gone up over time. If someone bought 1 million XRP for 2 cents back in let's say 2016 or 2017 or whenever it was that price, and they sold it for 10 cents in 2019, no one lost any money. They actually made money. So to try and counter Govel, the SEC is therefore left with kind of a strained analysis as to how purchasers lost money. And let's take a look at page 20 of Ripple's brief, because that's where it describes that part of the SEC's argument. Here's what it says, quote, the SEC asserts that some institutional buyers suffered pecuniary harm because they did not receive undisclosed discounts Ripple offered to other buyers. To be clear, there is no argument that the discounts themselves were unlawful. Instead, the SEC contends that if Ripple had disclosed the discounts it had offered some buyers, other buyers could have demanded and potentially paid lower prices. That argument is speculative on its face, both as to the disclosures that would have been required and the effect of those disclosures if made. That is why the SEC must say potentially. It's also the same argument that the Second Circuit rejected in Govel, that the loss of a right to make informed decisions equates to pecuniary harm. After all, the investors whom Govel defrauded certainly would have paid less and might well not have invested at all had they known he was misappropriating their funds. But the Second Circuit has squarely held that such an injury does not support disgorgement where an investor has received the return that was contemplated. The institutional buyers received just that. Oh boy. All right, well, that, my friends, is a very strong argument which was born from a lucky star last year on October 31st, and which allows Ripple to summarize in its brief as follows. Let's take a look at page 30. Quote, taking both discretionary and comparative factors into account, an appropriate civil penalty would be no more than $10 million. That would reflect about, that would reflect about blank because it's redacted, of Ripple's actual gross revenues from pre-complaint institutional sales, and would be proportionate in both percentage and dollar amount to comparable digital asset cases where there was no culpable mental state and no substantial risk of harm or risk of harm to others. So there you have it. Under Govel, well, before Govel, the SEC was requesting $1.95 billion, and Ripple says not only should there be no injunction, it should only have to pay $10 million in total because no one was harmed. They can't prove any harm to the investors or to the purchasers, and also $10 million would be a reasonable penalty based upon past penalties. So, and that brings us to my favorite part, which is speculation and conclusion. And this is where I get to talk about what I think is going to happen. And let's give it a shot. I don't know what's going to happen, but you never know. Sometimes I get these things right. So as far as the injunction, I think the judge grants and gives an injunction against future institutional sales of XRP against Ripple. I do think she will carve out an exception for ODL sales unless the SEC can really knock it out of the park on that issue when it replies in May. I think that's on May 6th. So I think on this issue, I'm going to call it a draw. I think the SEC is going to get some of what they want, but Ripple's going to get what it wants. I think that we're going to see Judge Torres probably try to split the baby, if I had to be honest, because this is what we've seen her do in the past. And I think that was a smart move on the part of the SEC to ask for $2 billion, because if you're dealing with a judge that likes to split the baby, the natural thing, the logical thing to do is ask for a lot of money or to ask for very little money, because you're generally thinking, okay, well, if we ask for $2 billion, maybe we'll get $1 billion. Now, the problem I have is that the SEC's argument in light of the Govil case is very speculative, and maybe most importantly, the SEC just can't show actual losses to the purchasers. It can say and show that purchasers could have lost money, but it doesn't look like it can produce facts that show actual losses of money. And, as kids say, goes with the courts, coulda, shoulda, woulda, right? So we need facts in court, and I don't see any facts yet about actual losses of money. So based on that, it's going to be very difficult for the judge to craft any sort of ruling that would hold up to an appeal. So I guess what I'm saying is I just don't see how the judge is going to draft an order with any disgorgement in it, unless the SEC can kind of pull off a little minor miracle in its final brief. And therefore, if, absent that, I am saying that the judge will order zero disgorgement, but throws the SEC a bone and orders Ripple to pay a $100 million penalty. Because why not? Just a nice round number. So I would say that based on what we've seen so far in the case, that the final judgment will come out this summer. I'm guessing July, maybe August. And then whatever the ruling, I think both sides file notices of appeal, and the case heads up to the DCA appeals court and is ruled on next year. Now, I wouldn't appeal it if I was the SEC, because bad facts make bad law, but that's just me. I don't know if the SEC can just let this go. Everything seems very personal to them. In any case, that's my call. $100 million and an injunction as to the institutional sales. We'll see if I hit the bullseye or if I'm way off target. That's it. We're almost done. Sometime this summer, we're going to get a final judgment, and we'll go from there.
All right, guys, so let us know your thoughts in the comments below. Do you think Ripple's going to pay $100 million, $10 million, or do you think they're going to have to pay up the full $2 billion that the SEC is asking for? And also, don't forget to get your gold and silver limited edition XRP coins through the link in the description below. Use the code BULLRUNNERS for 10% off before they're sold out, and I'll see you guys on the next one, because you know what we're doing. We're backing up our truck all the way to the bank. We're grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology is going up in value. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. So I'll see you guys on the next video. I will see you on bullrunners.com, where you'll learn our best ways to be able to make money in crypto. Because if you want to be able to turn $1,000 into $10 million, it's not going to happen overnight, but you can be able to 5 to 10x that in the right projects, and then rotate those into projects through a solid diversification strategy that's going to allow you to be able to scale your wealth over the next few years. So if you guys want to see what those projects are that we're the most bullish on before we make videos about them, then make sure you're subscribed to our daily video newsletter through the link in the description below. So I appreciate you. I'll see you on the next one. As always, you know what to do. Stay bullish.